do the breakdown, go over it all. Let me see. I should put this Discord here. Share screen. Change stream. Go to window. We'll take that one. All right, perfect. All right, you guys see my XRP? You should be able to see the chart now. All right, so you should be able to see the chart now. You see my XRP chart. And now we're in Discord here. So lessons for you, Dre. Just head over to the 102. Go down to the trading one side. You'll see the boot camp. Under that, you see lessons. Click on that. You should be. Let me see which permissions. 102 member. Okay. You should have the 102 course membership on there, but we'll check real quick. Let me check you out real quick. Roles. There you go. Gotta update your role for you. Now you should be able to see that lesson folder now. So in here you're going to see, just look for the 15-minute. You'll see that right here, the 102 trade review, 15-minute RSI. Then you'll see part 2 here, 15-minute RSI trade development part 2. Part 3, and then we're going to get into it today. So we'll do a kind of quick recap of what we had in that whole thing, and then we'll dig into it right here. So basically, kind of like recapping what it is. So the original, so we use what's called the stochastic RSI, which is the one that we use all the time. Looks like this. And then we have where this trade was developed, where they use the regular RSI, which is, it looks like this. It has 2 lines, a little bit different. And then it has the lines in it, the 50, 40, 30, etc., etc. So what we did was we took the trade that was built there, designed it, went over the design, and then started troubleshooting it, and then started locating things that we find to be easier ways to get into the trade. So you see here, these orange lines are the lines that we use, where on the 4-hour we were looking for the RSI to break above the 50 and move to the upside. So there's areas here that when that happened, it would trigger entry points, and so forth. And then basically anytime there was any downward movement and a re-trigger up, it would be these 2 here. So you can take a look at the video on that one. That kind of breaks that down. So what we're going to do here is just double check. We can see here that our entry would have been for the current trade. So the current trade right now that we're rocking would have been getting into the Young. What up, baby? That would have been getting into the XRP at 139.34, and then another confirmation after a pullback would have put us into this area over here on this candle, which gives us another entry after that pullback section. So it looks real good, man. I mean, so far this trade has been pretty much on point. Joe G, you up in here? Joe G. So yeah, I mean, this trade has been pretty much on point to what we want to see here. So you can see here, I just entered this trade here. So we got a 83% trade, $500 trade real quick. And this literally, I just entered this as soon as we hopped in this live. I seen the pullback. Oh, did I lose you? Oh, I lost my Discord. Bam, I'm back. Hit the wrong button. So what I was saying, guys, is the breakdown. Joe G, you hear me? What up, Ed? All
Hey,
right.
can you hear me? I'm here.
Yeah, I hear you now, man.
All right. Yeah, I
So
didn't know what happened there. I was like, is it my signal
no,
dropping out? What's going on?
no, I clicked that. I clicked the button and left the Discord. All right. So with the breakdown and everything that we've been doing, kind of with the steps that we put out, where we started using the 4 hour, and then once the RSI broke the 50 line, like we have a couple moments here. What is that? We have a couple sections here where um, we see that the 4 hour RSI that you use here breaks the 50 line there, creates this movement here, this orange arrow, and then there's a pullback, and then that creates where it starts to head back up on this next orange arrow. You see those two orange arrows?
Yep.
So that right there, we take a look. Obviously, we had an entry point at the 139.34 off that first orange, and then the next entry point would have been after that pullback. We would have seen something here where an entry would have been at 145.67. So far, I mean, so that's why I was kind of hitting you up, because this is your trade that we're dissecting here. So far with the steps and the videos that we've done, what are you seeing? Tracking this trade. We still got to get some data, over and over and over. But what do you see so far? Are these steps
Um,
helping you, or?
some of them are new. Like I never really went on like the 4 hour. Like I said, I would like stick to the 15 minute.
Mm-hmm.
But the way you're showing with the 4 hour and the 45 minute, like it seems like you have a safer window, like to trade for a longer period of time on
Mm-hmm.
that same trade. You know what I'm saying?
Yeah, so we want to get to where, now that we're going to close out to today, like I said, we're going to work on the entry. So right when I got in here, I seen the pullback, and I actually jumped into this trade, like literally as soon as we hopped on this uh, move here.
Mm-hmm.
And this is what I got right now. So this is literally by the time, as soon as I popped into the Discord, I
Dude,
I jumped on that trade right there.
nice.
Yeah, so this trade's right now, it's still working, it's still live. Yeah, so we're running it right now. So I'm just gonna move my stop loss up here, and we'll go from there. But yeah, so that's what we have now. That's how I lost the Discord. I went to I went to go post
Oh,
inside the club, and then I like hit the X. But yeah, so we just made a quick 600 on
so
that.
that's freaking sweet.
Mm-hmm.
So with your what you just did there, so you basically had like a $650 margin, and you waited until you saw a 4 hour cross the 50. You said?
Yeah, yeah.
Oh,
So
okay,
this is what we covered.
nice.
Remember
And you
this?
just
Yeah, this is what we were covering. Remember, so
yeah.
breaking down the trade and developing um, the strategy to the trade, right? So let me just.
Mm-hmm.
I'm not going to pay attention to this too much, but um, so what we're doing is, with all that being in there, it's kind of like, once you have the steps. So here's the gist of it, right? So the first thing was, going back to how you were set up. The ideal was just taking the 15 minute, and then you would be using the 15 minute. This is the RSI, right? And your thing was to
Yeah.
have the 15 minute RSI purple line, bounce off of the 40 or 50, and then that would be where you would be looking for a trade, right? And
Mm-hmm. Yeah.
what we did, and all these white lines, right? You see all these white arrows. Like if you go back to
Mm-hmm.
to the lessons that we did last week, these are the 15 minute entries. So these were all the possible
Okay.
entries that you could have taken and considered,
Okay.
off your 15 minute, without any type of,
Gotcha.
without any type of, trading box, or um, any type of. This thing is crazy. This trade is just crushing it. Look at this thing, stupid. And
Damn.
so that was just basically, so that's the original trade, right? So that's kind of like the basis of what we were doing, right? So it's like when you bring the trade to us, the the trade was broken down to where, and you can see here. Let's go down to the 15-minute. We'll do a quick recap before we dig into here. So this, when I go down to the 15-minute, right? All these white arrows in here are basically kind of like what you were talking about. You see how the purple line there breaks above the 50? And then there's a pullback right here. There's another white arrow. It breaks above the 50. Then it breaks above the 50 here. There's a pullback, breaks above the 50. Breaks it, you know what I'm saying, finds the 50 support, breaks up above the 50. Right, so all these arrows here, the white arrows, they're just 15-minute arrows above the 50. So we can add a few, like you see how here it goes way below the 50 line, and then it doesn't happen to it, pops up to here, and then that's pretty much how it goes across. So every time it breaks the 50, we put a white arrow on the 15-minute to basically represent, you know, the 15-minute trade. It's kind of how what you saw when it breaks the trade. Yeah, that you would normally be taking in those scenarios is just the 50 breaking above the line, right? And that's kind of where we ended it off there. So these are just, you know, we could add some more in here. So all these are like possible trades as you kind of build through here that you would be considering on the 15-minute, kind of like the 15-minute thought process on how you break it down, right? So that's kind of like breaks the 50. You know, all these trades here are like goes below the 50, finds support, breaks the 50. So all these moments here are all the times that the 15-minute broke that 50 that would have triggered how you're trading this style. It would have triggered the, you know, for you to be like, okay, I need to find a trade here, right? So these are all the opportunities on the 15-minute. I'm just doing the ones that break below 50 or bounce off it and then come up. And let's see. So these pretty much represent all the possible trades that you can take on the 15-minute. Now, with these particular trades, there's no real, there's no like what we call trading boxes, right? Meaning that at this particular time, there's no security boxes that are in there that are basically giving us the best opportunities to make trades. So that's what I'm saying. It's just these are just the 15-minute ones, right? That we could break up and look for possibility moves and be in those trades over there. So these are just kind of like those movements there. So now what we did was we like to have what's called trading zones. So we look for, you know, we don't want to get into a lot of trades like that, but we want to get into trades that you know, are kind of like the more secure, have more what they call, so everything is based on law of average. We want to do something that has where every single time it triggers. So if we look at all these white arrows and we went back and we said, okay, let's take a look. I mean, even let's like these white arrows here, right? So I'm going to go ahead and pull up the green chart, right? And what I'm going to do here is that even during like a bull moment here, how this is kind of like bull running, if we looked at all these arrows, right, we would see that here, you know, remember you're doing a very high leverage. Now notice here that if you would have took that trade, it actually went down.
Right.
So there's 1, 2, you know, those next two trades that you possibly could have took there, right? You could have took this one, or you know, this one, right? It would have basically been 2 losses, right? And then, you know, so as we go along and we start seeing over there, you know, we get the arrows that, you know, there's a winner, you know, the next one wins, and then the next one wins, and then the next one we get goes sideways, and that kind of goes into these two kind of run into each other, and then the next two come, and then you finally, those 4 end up getting a win, right? And then we're looking here, these end up getting a win as it, you know, and these are like bull moments, right? And as we go back and we look at kind of like what we would normally do here is we'd go into the situation here and we go back even further we can see that if we would have took these trades here, we probably would have been maybe breaking even till it broke out. But these 4 trades all had to go together to create one big one. These 3 trades, any of these sections here, we would have lost. You know what I mean? So this is where data comes into play, because what we're doing is we have to get to where when we have 100 trades, right? It's like how many of those won and how many lost, right? So then we could figure out, what we're doing. Plus, when you do a lot of trades, you're also, keep in mind it's like a constant, your fees. You're paying fees to trade, all these things. So you want to minimize trades and maximize gains. So what we did was we took that same scenario and we just added some, steps, right? So the first thing is trade development, right? So trade development is where we turn around and basically go, okay, how do we build this trade out? I should probably take this 1,000. Is
shit, $1,000? Holy shit!
Yeah.
That's freaking insanity.
Yeah.
BC.
What's up? What's up, guys? Quick 1,000, boys. Yay!
I said, take it.
Take it. Yeah. Well, it had a pullback. Look at that little pullback right there. Yeah.
Yeah.
Now the best way to close, so you guys can watch it since you're watching live, in your this is kind of like a trick that we got to cover, but there's a section here that has quantity. To the left of it is price, right? It's normally on market, but if you go to last price, right, you can actually put in the price that you want to kind of close out. So what happens is when you hit quantity and you close, it looks for the orders that have that. It's like a limit close. When you have market on there, it just closes, right? So it could take prices literally from the entire candle, right? Which range from 59.50 up to 59.90, right? So a lot of times you'll see a really good markup on your price, and then you close and you don't get that full gap. So a lot of times you just want to kind of go in there and learn to use the last price and even type in there. So so like right now we see the price is 15.9999. So I can go in here on my last price here. I have it at 15.98. So right now if I close this, it's a good thing that it would probably close in here because it's a little bit higher than most of the prices out there. But that's another way that you can maximize when you do close out. You're getting the price that you want. Now let's say if I wanted to hit this top and I say, okay, you know what? I want 16.05, right? So then what I could do here is I can go in here and then put 16. Let's see what the top of that little push was. 1640, right? So 160.40. So 160.40, right? And then I can put that there, and then I can even put a limit order and say, okay, when it gets there, close 50%. You see?
Nice. That's good to know.
Yeah, so now, you're getting, but the most important thing when you do close, you do the last price, you can drag it down, right? So if I drag this price down and slightly below where it is, it'll close most of the trade at the highest price possible. So that's something you guys can start using, especially when you have bigger trades like this, and you want them to you want to maximize the fact that when you are closing, you're not getting that long candle where you're closing at the bottom of the candle. You see what I'm saying?
So that's a limit close, you're saying?
Mm-hmm. Yeah, it's the last price.
Oh.
So you're putting in the last price.
I saw that last night on your post on XRP, and you were looking to go short after that bounce or whatever.
Mm-hmm.
And I was already laying in bed, but I'm like, okay, I'm gonna do this one short, then I'm gonna go to bed. I set my limit buy short for your take profit. I think it was your limit close or something. I forget what it was. But I got in the trade and it wicked me right out. And I'm like, okay, it's time for me to go to bed.
Yeah. Yeah, and so that's just a way to kind of and I'll cover this in another video. It just figured since I was doing a live close, that's how I would close this trade, right? So let's say if I was closing this trade out, I would simply go to last price, 15.989, right? It's kind of where it's sitting there. And then I would just close 100%. And then what it does right there for me, it closes at that higher price. It doesn't close the entire candle. It's almost like I'm setting
Right.
I'm setting the limit of what I want. All right, so now I took 50% of this trade, and now what I'm gonna do is I'm gonna keep my stop loss right below that little arrow piece, just for a pullback. Another thing you guys can do is take a look. You'll see here there's perforated lines, and you'll see these little boxes in here, right? They're kind of like, if you look close, there's lines. So what you want to do is kind of like find that one of those lines below that bottom, and normally that'll kind of give you a support area that it's running. But yeah, okay. So we're gonna leave this trade here. It's either gonna pull in 1,000 or maybe 2, but we'll see. All right. So now back to your trade. So all these possibilities here are these white arrows are all the 15-minute possibilities, right? So what we did here was very simple. We don't want to be trading like every single time the 15-minute decides to do something and then, be on a 50-50 mark. Like, these 5 times it goes up, these 5 times it goes down. So what we do is we create time frames, right? Most of the time they're like trading boxes. This is where we'll go to a bigger time frame to kind of find, a time frame that fits, what we're looking at, right? And this is where we notice that when we go to the 4-hour time frame, right? We've noticed that if we use the same theory that you were using, which is basically on the 4-hour, when the 50 line breaks, or when the
I see.
Yeah. So then we just mark off.
So you got like 6 or you got 5 different 15-minute trades in one 4-hour box.
Well, yeah, because what happens is, so what we're doing here, instead of the 15-minute break in and then we broke it down to where instead of kind of like watching the RSI go up from, because I remember we talked a little bit about, you were talking about bouncing off the 30, sometimes it bounces off the 40. So what we did is, after we broke it down, it's another video we did last week. Remember we were talking about, okay, let's find it, and what I noticed was that when the RSI on the 4-hour, it's almost like how we use this, the stochastic RSI being above the 20 line, right?
Right.
So when those type of things happen, they become where you have like more momentum. You know what I'm saying? So here's what I noticed here was it's when the RSI line was above the 50, then there was better momentum on the regular RSI, not the stochastic. The stochastic normally we'd use the 20 line, right? But I just kind of like using your same version of the tools that you use to make this trade happen, just making making it better, right? So here, when this breaks the 50, you can see right there that purple line breaks the 50. It won't print until the next line, so that's why the orange line is there, right? Even though it's kind of a little bit you can see it a little bit above it earlier. You could probably say to yourself that's probably a buy zone because I see it above the 50, so we'll just keep it there. It's fine. But the 4-hour over here, as soon as it bounces off the 50, then it would be here for an orange line, and then the same thing over here. So this would be it. It breaks above the 50. This would where we would see it, and then here the same thing. It breaks above the 50, so this is where we would see it, and then same scenario here is we see that it starts to head down, but then it starts to head back up there, and that's pretty much where it stayed. So now we go back over here and we can see the orange lines, right? So now without using anything else or any other tools that we have, or the moon indicator, this is just developing the trade, right? The easier it is to develop it, the easier it is to create it, a line that we can follow, right? So you can see now when we look at this, we have these orange entries. So there's an orange entry that basically was here, and then we have an orange entry that you can see here was here, right? So this orange entry we have is here. Let me move that box a little bit, and we'll go over and we covered this in the video. This is the video we covered the other day about the entry of that spot too. And then as we go along, we can see here's an entry here. This was our entry here. Here's another orange line here, and you can see that. You see how they're, when you look at them and you put them up to the map above, the chart above, you see.
Right. Yep.
these are the bigger movements that are happening. So when we have that, right?
And those the orange ones are the 4 hour. You're saying
Yes.
better than the 15 minute, because the 15 minute you're entering like say 5-6 times, whereas in the 4 hour you enter one time, you ride it for however many hours, probably most of the day, right?
Yeah, because now you're going to have, you're with the highest momentum, right? Then what's so weird is that this is a momentum trade, right? So it kind of plays into the fact that, with a momentum trade, then we just figured that we would build it based on momentum situations, right? That's what the RSI is. And RSI is simply what they call sentiment, right? Sentiment is what people are doing, right? The retail or the masses, it measures buyers versus sellers, right? And when the RSI is moving up, it's just telling you that at that particular moment, buyers are out doing better than sellers, right? That's kind of how that is. And that kind of puts you in there. I think we closed out. Yeah, we closed out on there. Probably should short this bad boy. All right, let me get back to the lesson. So hard not to trade. So, well, because the way it happens is, right. So we made $1,000, right? So theoretically, depending on where I'm at in my mind, and this is kind of like the master course. It's a little bit different. It's boot camp style too, right? So you're in the boot camp. So this is some of your lessons would be, okay, I got 1,000, right? Now I can set up my next trade with the ideology that let's say that my normal loss zone is $50 to $100. I just hit a big trade. Now I can get my zone a little bit bigger, and you know what I'm saying?
Yeah.
And give myself some leeway, because my normal 100, I can add 100 to that and be like, okay, I can get in here and I don't have to stress because I made that money, right? So that I can go in there. So for instance, if I was in here and I wanted to short this, right? I could come in here. I don't really have any stress on that side. So what do we have? A $1,700 bag. So we do something like this. All right, so I can get my entry in, right? Now what happens is I might take profit, or normally I'm going to do something like 20%, right? 30% in that area. And now I can kind of stretch it out and say, okay, I got 200 to play with. So that means whatever I'm in at this moment, I'm 45% back. I can 4 times that. Right now I'm in $137, which means I have the ability to come in here and do like another 3% here. And then what I'm going to do is I'm just going to open this up to kind of like the a little bit higher up here, because what I want to do is, here's my stop loss. Right, and I know I can lose a little bit more than that, so I'll kind of like, that's what I was saying, find that line that I look for. But now I can put a limit order a little bit taller at the top of these candles, because what that's going to do is it's going to bring my my entry point up. Yeah. So then I can find myself some little in-betweens here, 159.80, and I can set myself up. And just by knowing that my 3%ers, my 3% stuff like that, puts me in that place. So then I can set these two things here. And if those actually trigger and I lose, then I lose my 150. But I'm not stressing it because it was a win side, so I'm pretty good there. And now I just go back and I say, okay, I'm going to take a quick, let's say we win this out, we'll run it for 90%, right? So I'll just try to win a quick 100 off that trade. And then I'm good to go, right? So, and that's just kind of...
on your limit orders that you put in there, how much margin were those?
So the first entry, the first entry was about 5%. So those are 3.
Oh, okay.
Yeah. So if they do hit, it'd be like $500 into that trade.
Right. So originally you had 18% though, right?
Yeah. So originally, I mean, we were So originally I put the whole 100%. So earlier the trade was a $900 trade.
Oh yeah, the one you won $100 or $1,000 on.
Yeah. So now that I take that win, now what I'm doing is saying, okay, take your win. So learn to trade with your profits. You see what I'm saying?
Right. And not your money. Yeah.
Yeah. Because now it's like this is
when I was
free money, right?
When I was doing it, I took a $5 bag and I turned it into like $170 but
Mm-hmm.
I didn't keep trading with that every win. Every time I won $5, I'd put it in spot, and I'd trade with $5 again, and I'd put the
Mm-hmm.
winnings in spot. And then once I grew my spot big enough, I'd put more money back into my
Mm-hmm.
actual trading account, and
Yeah.
that way I was never, if I blew a bag, I was not going to be,
Yeah, it was only
you
five
know,
bucks.
upset about it.
Yeah.
Yeah, I could just go back and grab more money,
Yeah, and that's
but it was all profits.
yeah, all profit. So and you got to make sure that you have. So that's where knowing you once you move a bag, you have to stay in a bag, right? So if you have a like so if you're going to do a big bag, right, and you're moving and you get some wins, you can downsize a bag, right, and then say okay. I just hit for 1,000, so now I'm going to do three. I have now theoretically just off those gains, I have three $300 bags. See what I'm saying?
Right.
So now I take
Yeah.
those profits, I divide them by three, and now I can start making $300 trades, right? And then I
Right.
build that up to where once I get that up to 900 $1,000 again. So now you see what I'm saying? What most people do is the opposite. Right, they'll start off with 5, 10, 20, and then they'll have a couple big wins. So right here, this is where most people they just hit 1,800. They would probably now I would have shorted this a lot earlier because I was actually like I wanted to jump on this
Yeah.
when I
Yeah.
closed. So I would be up quite a few bucks here. But most times what people do is they'll basically say, oh man, I'm up 1,800, and then they'll go for like 1,500 here, right?
Mm-hmm.
Now your stop loss is taking 30% of that 40. Sometimes people try to. This is where they think that they're going to take a deeper stop loss and say, I'll do 60%, 70, and then all of a sudden you just gave back the 900 on one move,
Yeah. Yeah.
right? So this
See
is where
what I would do. What happened to me was, well, this is my problem. I'll get a few good trades, and then once I have I struggle getting into it, even though I know the strategy.
mm-hmm.
Like I was watching the trades this weekend, and like I wasn't able to trade a lot because I was underneath my car all weekend. But I was watching, the RSI,
Mm-hmm.
and I'm like, oh, this would be a good time to jump in because the 4 hour is the four. I was watching a 45 minute,
Mm-hmm.
so I was watching a 45 minute. I'm like, this is a good time to get in. But I would like, I don't know, it could go the opposite way, and
Yeah,
I talk myself out of it.
well
And then,
that's
if I do get into a good trade, like last
Yeah.
night, I got into a trade right after I lost my XRP, my stop loss. I got in another one, and it immediately shot right up, and I was up like $10. I'm like, oh shit, I'm gonna close it out and go to bed.
Right.
And I couldn't even hit the button fast enough before it went down negative, and I lost again. I was like, whatever, I'm done for the night.
Yeah, and here's the kind of okay. So now this is where you have to kind of put in your head. This is why we have the 30 club, right? The 30 club is kind of
Yes.
like keeps it simple, and you got to remember, like here, if I did my $1,000, right, I'd be up 300. If I did the 1,800, we'd be up 500, right? Now
Right.
I know that on there that was probably an easy short for me to grab right away, and an easy 500-600 on the move down, right? But when you're disciplined, you're like, okay. So that's why when we're live and we trade, we trade where it's like the simple part of it, right? So what I did here was able to grab that 30%. Now I can here's another 40-50 bucks that we're using for trades that we get into, because what you're doing is you're like building up your safety bags, seeing what you
Yeah.
have. So every trade happens, and then you're like, all right, there's 40 bucks. There we go. Last price. Take it over 100%. Close it. And this is what I mean here. This is the last price. If it's a little bit higher or lower, you can just move it, right? So now I close out. I take that 50 bucks, right? Now, if I want to do this trade again, right? Because remember, mentally, I'm always thinking to myself, I'm aware that there's going to be a 1, a 2,
£2.
right. So I know that this isn't the best trade for me right now. And so what I can do is I can take my limit orders, and now I can go over here and I can reset this and say, okay, all right, and this is where, like, let's say we're going to bed here and we're like, okay, man, this has been running. Check all your things and make your decision. But once you set your limits, you can go to your limit and you can just put on there, okay, I'm gonna do a 30x here, 30% stop loss. I'm gonna do a 30% stop loss here, and then I'm gonna take profit at 60%, right? And you can leave those in there, and head out.
Go to
Now,
bed.
yeah, the worst. I mean, like I said, the worst case scenario at the end of it, those are planned out to, like, if I do lose that, it's $200, right? I just won 50,
Yeah.
so in reality, it's 150. But if they do play out and they do what they're supposed to do, now I could pick up another, depending on how they hit, another 100, 200, depending on how they play out, right? But that's what you want to start doing is getting to where you're not using the big wins to chase into it, right? You have to have your system set up. Now, another thing is that the mental goal is to have a $2,000 bag, $1,800 bag, take those type of plays, and then go for 20%, right? That's $400.
Right.
I don't want to be.
Yeah, when you have more money,
trades.
You can get out with less ROI and still make a good amount of money.
Yeah. You don't want to be stuck in those scenarios where you're kind of like, you have to. So that's where when you start switching up a little bit on how you maneuver through the trade, you're trying to break the emotional trade.
Yeah, that's what I am, emotional. Every time I get into a trade, it's like shaking, kind of, because it starts moving real fast, and I'm like, oh shit.
Yeah. Well, yeah, you gotta. That's what I'm saying. Like, you gotta, like, almost. You gotta be going into the trade like, all right, this is what I'm losing. You know what I mean?
Yeah, exactly. And I never do that. I always go in like, fuck, I don't want to lose $10. I don't want to lose $3.
Right. Yeah, you just. I mean, that's. It's a weird saying. They say don't trade with anything you can't lose, right? And what they're really.
And
they don't know why they say it. They just say it because everyone's so emotional. But the whole thing is to you should, if you get into a trade and you're worried about losing the money, then two things are wrong on that trade. Is one, you're in a trade that you're not confident about, so you shouldn't even be in the fucking trade, right?
Yeah.
You need to be in trades that have percentages and have steps to them that produce certain winnings, so that when you go into it, you're aware that out of the next 10 trades you make, if you lose 3, you'll win 7. Right? So you got to expect that. So you got to have, if you're doing $100, you got to have 4 bags. You got to have 400 that you can just keep replacing, right? Because if you lose, it's 40%, 40. If you're, let's say you get into a spot where you're doing 40% stop loss, 30%, depending on leverage, right? Lower leverage, less stop loss. But let's say on average, we average 35 to 40% stop losses, right? Which means, most of the time we're going to do 30, like I said, we do 90, 30, 30, right? We're expecting 90% leverage, 30% target, 30% stop loss, right? So at the end of the day, if we're doing 100, we're expecting to lose 30. So every time we lose 30, we got to have a bag that we can grab, and another $100 that we can put $30 in 3 times, right?
Yeah.
And then let our wins take us back over, but it's going to be a long haul because it's a 10 trade stretch, right? So that's kind of where the mentality is like you got to be trading systematically, right?
Right.
Very simple. So this is where looking at the XRP trade. All the reason why I could see, if you're doing your 15-minute strategy, all these white lines are actually trades that they're not even the 15-minute bouncing up like normal, like trades you would take. These are 15 minutes above the 50. So it's actually generating good trades in the 15-minute zone that you would normally take. So a lot of these you can see here, I mean, we were trading all these trades, you can see why, you're having a lot of those, things. There's a lot of trades there. Right, so what we do is we go to the 4 hour, and we do the same thing. When the RSI broke the 50 line, right, that created momentum here that actually we decided to say, okay, that's the trade we'll take. So that's the strategy number 1 is developing a trade. Like, how do I enter a trade? What is my trade, right? So this is the 4 hour RSI 50 line trade, which is simply when the RSI breaks the 50 line on the regular RSI, that triggers an orange arrow, which would be an entry arrow for us. Okay, That's simple.
Right.
So as we go through here and we look here, we can see every one of these orange lines are when the 50 line breaks, or the RSI breaks the 50 line. Pretty much that easy. Now, if we look at them now and we kind of measure these out here, we can see that when these decided to break on our oranges, notice how, unlike the white ones, these actually had runs. Right? So even this section here where there was the smallest run that was out there, this one right here, it still had a run in it.
Yeah.
Yeah. So now this is just, and this is nothing, this is not incorporating the next step, which we did, because we like to have trading boxes, right? This was just taking the concept of, okay, I have RSI, and this is a momentum trade. I normally trade the 15-minute RSI when it breaks the 50. We went with the 4-hour, right?
Yeah.
And that, if you look here, we've had, this is 1, 2, 3, 4, 5. So 5 out of 5 trades that we would have made, one of them would have been probably, we just say, I mean, it's not as massive as the other ones. We'll just call that a loss. So now we're out of 5 trades, we're 4 out of 5. Which means if we do another set of these trades, we're probably going to be 3 out of 5. So at the end of the day, we'll end up 7 out of 10.
Yeah.
Right?
And when you enter, like, your entry point is the start of the purple box, correct?
No. It's just the orange line.
Or that's just the trading.
Yeah.
Oh, okay.
It's the orange line. Right?
Okay.
It's the orange arrow. It's
so
when the
box
purple
is the whole trading zone.
That's the next thing that we added, because what we did was first find the momentum trade, right?
Yeah.
So the momentum trade, instead of the 15-minute RSI, not the stochastic RSI, but a regular RSI, the 15-minute RSI breaking the 50, we decided to go with the 4-hour RSI breaking the 50, increasing the momentum of the trade.
Right. Yeah,
Okay.
the faster it'll go in your favor.
Yeah, it's more, at that point, we just figure with the 4-hour, it's going to have more momentum in there. So then that would be, giving us the opportunity to have, better success on that trade. That's how we looked at it. So that's why, that's just step one. So step one is what is this trade? It's a 4-hour RSI trade, right? What it is when it breaks the 50 line, that's a trade, right? And you can see if we took that trade by itself without anything else, orange, 5 trades, 4 out of 5 won. You can see up here, right? So these are 4 out of 5, these trades. This is what they did. And 4 out of 5 times that particular trade without anything else, just the 4-hour RSI breaking the 50 line, we were successful, right?
Now, would you consider the last 2 orange arrows? Would you consider that like as one trade because it could have been?
Yeah, it could have been. I mean, if you caught that first arrow, you're good, right? And then there was.
I see why you have two. You have 2 separate lines though, because it broke above it and then it came back down below. Correct?
Yeah, it pulled back. Mm-hmm.
Yeah.
So, but I mean, theoretically, if you caught the first one, then that's where you're at.
Yeah.
A lot of times we're also we're catching the 1, 2, and then some people wait for that third one, right? So we're also looking at how often that happens, right? But if you just took this trade when the purple broke the 50, that's where you're at. And if it pulls back and then starts to head back up, then boom, that triggers another trade, right? So without anything else or any other guidelines for this particular trade, just the 4-hour RSI breaking the 50 line, we're 4 out of 5, 7 out of 10. Okay?
Pretty friggin' good.
Yeah, pretty simple, pretty good, pretty basic, not hard to follow. I mean, this trade all goes to this. The 4-hour breaks the 50 line. You enter a trade. Shit ain't that hard. Now, what we did to give it a little more spice to it was we turned around and then said, okay, based on what we like to do, which is our theory, is when the 4-hour RSI breaks the 20 line. Right? So you can see here, when the 4-hour breaks the 20, that is what we we trigger as a normal, like this is kind of like a student trade. This is the kind of like what we use to um, just give us confirmation of like momentum, right? So whether or not you add that or not, it's the basics. But as you can see, the only trade that kind of doesn't have any momentum in there, the 4-hour RSI wasn't part of that trade. You see right there? That's the only trade that didn't really have any type of like, that section right here, this section
momentum.
right there. Yeah, that's the only one that kind of like failed to, hit its mark, right? But every other trade was either trading into the 4-hour RSI or the RSI was going sideways, right? But the one that didn't make it, the 4-hour was heading down. So the one rule that we would have, this trade would have been massive. That's another $1,000 trade. Fuck. That's where it was so easy. I should have just pulled the trigger. But see, here's $1,000, and then boom, it retraced, and then it's gonna bounce.
Damn.
But the thing is like, so the rule here would be like, don't trade against the 4-hour RSI on the stochastic side. So by implementing
on
that,
the stochastic, or
stochastic,
the regular, you mean?
stochastic.
Oh, okay.
Because the only time the regular RSI failed to make its money, and it didn't really fail. I mean, if let's go take a peek here, right? I mean, we say fail, but at the end of the day, if we traded this trade, right, and we're going to dig in this a little deeper. We're going to go to, we'll just kind of see this time frame. That's March 11th. So normally the way we enter is on the smaller time frames. So if I went in here and I'm going to look for March 11th on the 1 minute. And why I'm doing that is, because we say a loss of a trade is, and really it was the smallest possible trade out of all of them. Doesn't mean it was a loser, right? It probably still won.
Right.
But it just didn't, it didn't have the momentum where, we like to have a lot of,
You like that quick trade like you had just now.
Yeah, we want to be, we want to be trading with the biggest momentum side of everything, so that way it's like paying off there.
Yeah. Because how long were you in that one trade, $1,000 winner?
5 minutes.
Yeah, that's freaking sweet.
So let's see here. I think was it this one? No, it was this one. Okay. So this was the one that we're considering a loser, right? And when you really do look at it, and we take a peek at it, I mean, it did move 2%, right? So it's not like it was a loser. If you're doing 90x, I mean, it did 150, 200%.
Yeah.
So
yeah.
I mean, but we want to be in the, if you take, remember we're 50-50, right? So if we take half of that and we say, okay, half of this move, then that would be, the odds would be 1%, maybe 0.75. So it all comes down to the same thing, where we're basically, what we're doing is we're looking at the, okay, that's my XRP. Let me see which one I got here. Alright, so that one's this, that one's that. Okay, I don't care about the leap. Alright, what I want to see here is real quickly. So I have my 4-hour, and I'm just checking on this pullback real quick, and my 1 hour. So we're pretty much exhausted on all that. So what I'm going to do here is real quickly, because I have, which I should have already done. So I have like sub accounts.
Okay.
So sub accounts are where you have your long trades, stuff like that. So you can see there's sub accounts here. So I'll switch to that sub account. So this sub account was started probably, I don't have the permission in there. Just give me my sub account. I think I put $300 in here. I think it was like 10 days ago. So this is the long hold XRP trade, right? So now it's
Oh, well,
yeah. So now it's grossed up to 1,400. So what I'm gonna do here is, which I should have done right when I realized it was pulling back on the 4 hour. So what I'm gonna do here is just basically go to last
quick
price.
limited.
Yeah, I'm gonna take, probably about 50% right there, and I'm gonna close that out. And what I'm doing is I'm just taking the profit side of everything, which I'll use after this 4 hour pullback, because we have a daily and a 4 hour pullback that's coming, and I just want to take the profits and put them into the trade itself. Give my XRP, would you? Thank you.
You use the profits to
Rebuy.
re-enter, you're saying?
Yeah, so you see how these limit orders I already have? So I'll be looking to, later on I'll set more limit orders down in these areas here and then start buying the dips. But yeah, so that was a $300 trade a week ago. Now it's 1,400. All right, so now that's what you use sub accounts for. So when I give, like, that trade's actually a trade that a guy who's in the master course, I track the trade that he's in so that I can see the results. So when I go back and look at it, we can kind of like, so right now I'm gonna text and be like, I'm selling 25%. All right, so that way he knows what I'm doing, and then I track what I'm doing too, so that way I can go back and look at it. So if I'm like, how'd you do? And he's like, well, this and this, I can say, okay, well, where'd you miss? All right, so just to kind of like look at this particular trade here, right? This is the worst trade out of the bunch. It did 2.6, which in reality, I mean, if we break it down, it's probably 1.3, half of that, 0.7. If you're doing high leverage like we're doing, which is 80%, 70x, we're going to hit 30 to 50% on this trade. So like when I called it a loser, I just called it a loser because it didn't do what the other trades did, which was an average of 4 to 7%. Right. So that's where how it breaks down. But all these trades, once we have that box set up, you can see all these boxes here. This is where we covered last week on breaking this box down, and then we also, if you remember, we were breaking down the entry points to these boxes, which is what we have here. So that green flat line is our entry box. The red line was from our entry how far it went down, and then we have the green line, which is like how it went up, and then we covered all the bases here, and then the second pullback, which is the push up, the pullback. So the second white arrow is basically the bounce, right? So you can see inside here we have these type of trades that we have. So what I'm going to do here is slide off, and we're going to make a quick video of the entry